Hello everyone, today I want to go into one of my favorite options plays, that is the put credit spread. That's where you sell a put, you buy a put further out, a little bit further out, you get a credit for it. It has a high probability of success. I really love this trade. It is one of my favorite trades, and one of the best things about it is that you have a defined risk so that you can sleep at night. You know, when you get into this, you know what your max win is and you know what your max loss is. So without any further ado, let's get into the put credit spread. So I know this video isn't as exciting as Workhorse going to 100, but there's so much value in this video. It's a lot of what I want to do going forward. Do videos on options plays, do some option trading, option selling. I sell that premium. It's better statistically. It is the best way to go about it. If this is the kind of stuff you like, I highly recommend you hit the subscribe button. If you're down there, go ahead and hit the like button if you like the video. You can follow me at Nostradamus on Twitter, so let's get right into this. So the time of this video is Sunday. It is Sunday, September 13th. It's 5:24 in the afternoon. Pretty pumped. The Nasdaq's up about 108 points in the futures. Looking forward to tomorrow has to offer. Just kind of quickly give you an idea of what I'm going to be looking for tomorrow. We got the Nikola. The Nikola is going to be fun to watch this week. And I just did a video on that. Be sure to check that out. So Tesla battery week's coming up a week from Tuesday, and then the Apple event's this Tuesday. So I'm going to look tomorrow to put in a couple of put credit spreads in both of these, probably $5 wide, meaning my max risk is the width of the strikes, which I just said is $5 minus the credit received. I'm going to be looking to get 1/3 of the width of the strikes. These meet a lot of my criteria when it comes to doing put or call credit spreads. So again, $5 wide. I'm going to be looking to get 1/3 the width of the strike, or right around $1.66, which would be right around 1/3 the width of that $5. And so my max loss would theoretically be whatever the difference is between the width of the credit spread, $5, minus that 166, or roughly 344. So like I said, high probability of success in these trades, greater than 50%. You put these on all the time. You look to buy it back at about 50% credit. A few other criteria I tend to look at, and the biggest one would be liquidity. Liquidity is king. I'm sure you've heard that before. So Apple and Tesla are both extremely liquid. That plays an important role in many factors because the bid-ask price on these are going to be really tight, and Apple probably a penny wide. Tesla probably similar, so that means you can get right around the mid price and not really lose a lot of money between your bid and ask. And then the big thing comes when you're looking to close out the trade. If it's not liquid, you're sitting there just praying, trying to close that out, and hold on to any profits you have when you close that out. And if it's not liquid, the bid ask will be really, really wide, and sometimes it's really hard to close those out. So let's hop over into Tastyworks, my preferred platform for options, and let's do it. So hey, here we are, we're in Tastyworks again. Love this broker. If you want to learn how to do options, watch my videos. I will be doing a lot more of it. I want to start doing some live streaming. I want to get my subscriber rate up to at least 1,000 plus. So go ahead and hit that subscribe button if you want to see that. Do some market closes, some earning trades, a lot of options plays, some Q&A. Anyway, let's get into this. So I actually already have a put credit spread in Apple, the 110-105, and I am actually down $35 in that. I may add to that. I was looking at my Tesla play. Tesla, I have way too much size in there. I have 200 long shares, and I have a covered strangle around that. I am making great money off both, actually. Tesla, I was actually up way more into this recent pullback. Now I'm only up like $1,000 in that. But I've been making great money off the selling calls against all that. So if it does rebound, that's going to end up working out really well. Though I'm probably looking to get out of 100 of those shares and just start maybe doing some cash secured puts instead. So I don't know if you'll notice that or not. We'll have to see how well I can edit that out. But my iPad in the other room, you don't care. It started playing a YouTube video. It was like thought someone was in the house. I was reaching for my guns. Anyway, real quickly, Tesla, the strike prices are really weird because of the split, and it really changed things up a bit. There's a lot of weird strikes like 318, 316 versus $5 wide. So I am looking at a $10 wide put credit spread. I don't know that I'll do this. I don't know if I want to go this far in. Really interesting thing Tastyworks will show you. Again, the IV rank is $109. In the October 16, 2020, the expected moves $92. This stock is highly volatile. They do have earnings October 28th. That's going to add to the volatility. The October 16th expiration is before that. But as it currently sits, by October 16th, the market is saying the stock could be anywhere between $280 and $465. We'll have to see how this is tomorrow when we take a look at it and the market's actually open. Just doing a little bit of discovery. But right now, if I did this trade, I could get $3.45 credit. It's $10 wide. So my max loss would be $1,000 minus the credit received, which is $345, which puts me at $655 max loss. So if Tesla were to go below 320 at expiration, so this is a bullish assumption. Right now, this is saying about a 72% chance of success of being 50% profitable. I really like that. The odds are in your favor. Again, you can lose money if this stock is below 330. You can start to look, it'll depend on how much below 330. It'd need to be below about 327, 326 before you start finalizing your losses. So I would likely close it or roll it way before then. I'm not gonna wax on about this much more. I'm gonna go ahead and stop the video tomorrow. We'll be back. Stop the video now. I will be back tomorrow and we'll put on some live trades. All right, everyone. So it's the next morning. It is 6:33 a.m. The market's been open for a few minutes and let's get into it. My plans may have changed quite a bit since yesterday's video, so let's check it out. So I'm not so sure. I'm probably not going to add to my Apple position. I am thinking about adding the Tesla. I do think it's going to, my put sold. So I had a put in there and that sold. I could think about rolling that up. So let's take a look. So doing a naked put's been pretty heavy. But for example, I think the odds of it going below 250 by October 16th are pretty slim. If I were forced to buy Tesla at 250, I wouldn't hate it. Plus my credit received, it'd be about 245. So this is a naked put, guys. This is a lot different than doing a spread where it's defined risk. My risk is really 25 grand if Tesla were to go to zero or minus the 500, so 24.5. Do I want to do it? Let me think about that and I'll come back. Actually, let's take a look at just doing a defined risk trade as I discussed yesterday. So let's look at like a 330, 325, which I can't do. All of these spreads are killing me. All right, so 330, 320. Get that for about 365. Let's see if that fills. My defined risk, so it's a $10 wide minus the credit received. So I'm risking to lose about 645 bucks. I don't know, learn some math. So that might take some finessing. Let's see if we can just change that to like, I did not mean to hit replace. Well, it must have filled. It did. So there we go. We got to put credit spread on. I'm going to immediately put a 50% buyback, go to cancel. Let that thing work itself. And follow up on that later. And I will post this on Twitter. Like I said, I'm probably not going to add to Apple, though I am kind of bullish. I want to look at NVIDIA. They had big news over the weekend. Premium's probably going to be pretty good. IV's pretty good. It's up $32 on this news. See if we can do something there. Let's just like immediately check out an iron condor. So an iron condor is where you sell a put spread, you sell a credit spread. You can see the expected move is somewhere in October of about 70 bucks. I'm going to move this all the way out to the expected move, $5 wide. Probably be right around 1/3 the width of the strikes, or 160, 170 range. We'll see when we get there. 212, that's pretty good. Do I want to leave it like that? Yeah, what the hell, let's do it. Let's fire it off. That might take a little finessing. little price discovery, a little bit of program freezing. What's going on here? It must be filming. Well, I'll let that settle. A couple other things I want to look at were like AMD. Maybe we'll put something on in there. AMD's been down quite a bit since its highs, down about 10 bucks. So normally so one thing I forgot to mention is the theta, right? So this is my theta up here. The higher that number is, it's kind of like your passive income. That's how much your option should decay daily. You kind of want to get that up to like 1/10 to 0.3% of your total account size. The total account size is a little over 100 grand, so I would like to get that up to at least 100, ideally to 300. Let's take a look at a put spread in here. See what kind of juice we get. We're gonna have to come up quite a bit on that. So that's a 2.5 wide put spread. I don't hate it. Let's see what a $5 wide looks like. That's close to 1/3 of the width of strikes. If I would have done this about 10 days earlier, it'd probably be in a lot better shape. But then again, 10 days earlier, it might have been up way more because that's, you know, the crash came within that time. I am bullish. I don't hate the trade. 162. You know, if I can get like 161, put that in, fire that off. So that's working. Let's go back and check our working orders. So that's still, ooh, that's down, that's come down. I don't know why I can't click on this right now. It's really frustrating. Oh yeah, because I need to do that. All right, let's change this. Premium's coming in quite a bit on that already. It's just the early morning. AMD filled good. Let's do this at about 190. That's still really good. So wait, you know, that's above the 1/3. Filled 190, that's in. So on that one, $5 wide, I got a 196 credit. So my max loss on that would be $5 minus 196, or math is tough on the fly, 304. So $304 max loss on that. Really good chance of being successful. Look, everyone, if you follow these trades, I'm not a financial advisor. This is my money. When you do it, it's your money, your decisions. But these are trades I like. So let's take a look at a few other things real quick. I really like Upwork. Really bullish on Upwork long term. Let's see what we got. IV ranks a little low. IV's pretty high. Let's take a look at this. We can do, I might do a naked put in here, get some theta on. I am bullish. Get about $1. Let's try and get the mid, $1.17. Didn't really expect that to fill. Does have high liquidity, you could see that. Let's move this down to about $1.15. Come on, baby. There we go, filled. So I just sold a naked put in Upwork. What that means is, that is a defined risk trade if Upwork were to go to zero. So it'd be your $15 strike to zero. So $15, you take that times 100. My max risk, if Upwork goes bankrupt before October 16th, is $1,500 minus the credit received, which is $115. So my max loss would be $1,385. There's a 51% chance this will be or touch. It's a good trade. I like it. Worst case, well, not worst case goes to zero, but again, I'm bullish Upwork. I wouldn't mind owning the stock. I just did a position, cash secured per put. If Upwork were to go down, I would be forced to make a decision. So it'd have to go down to 15. It's, you know, 15.30 right now. Plus the credit received, $1.15. So that would put my entry, or where I start losing money, at $13.85. The $15 minus the credit received. If you have any questions on any of these trades I just did, be sure to comment down below and I'll try and answer them the best I can. I will continue to do more videos like this where I put on live trades. Again, I do want to get my subscription account probably up to about 1,000 plus, and then maybe I'll start doing just live streams, question and answers, live streams on some market closes, some earnings plays. I was considering doing a strangle on something too. Let's see. So we can go over to my list, sort by IV. Nickel. How's Nickel doing? Down another $3. Shocker. Go through here. Really like Neo. Oh, DraftKings. I was thinking about doing something in there. It's kind of flat today. 90%, 96%. Let's look at something over here in DraftKings. Let's see what a put spread looks like at the money. $2. We can go down. See what that looks like. $1.05. I'm bullish. I like this trade. So I'm basically risking, I'm going to get a $2 credit, $5 wide. DraftKings would have to go down. I'm pretty bullish on it right now. There's a lot of football going on. The risk there is there's a big coronavirus outbreak in one of these games, and then obviously, but max loss here would be around $300. Let's fire this off. See what we get. Did that fill? Already filled. Look at that. We put on quite a few trades today. My Theta's climbing up, 69, still not where I'd like it to be. Again, that Theta, you know, the stuff decays. It has the options decay. Yeah, that's just money you collect. So let's wrap this up. Again, if you found this video useful, please hit the like button. Please hit the subscribe button. I love you all. Catch you all later. Peace.